Have you ever looked at a trading chart and wondered, what's it really saying? Every line, bar, and candle tells a story, but it takes time for us to comprehend. Then comes that moment when price movement starts to flow, when we can see and feel the music. Today, Michelle will decode trading charts so you can hear the market for yourself.
Welcome back, traders. Now it's time to unravel trading charts. With the basics of technical analysis under your belt, we're ready to dive into the charts themselves. Our charts help us turn price moves into clear pictures we can understand. By the end of this lesson, you'll know how to read different chart types, spot simple patterns, and use them to make smarter trading decisions. Before we go further, don't forget to grab your beginner's quick start guide. The link's right in the description. Think of it as your toolbox for learning to trade smarter. And whenever you can, watch our lessons on a larger screen so you can really enjoy the classroom experience. Let's begin with line charts. Notice how they connect closing prices over time. They form a smooth line that shows the market's direction. Line charts are simple to use. They are perfect for spotting the overall price trend at a glance. With line charts, you'll easily spot the market's direction instantly. You'll know whether price is moving up, down, or sideways. Also, line charts removes market noise. Those distractions, banks, institutions, and hedge funds create to take your money. Let's take a closer look at line charts so you can read them with confidence. Once you understand how to interpret them, you'll quickly recognize patterns and identify market changes fast. First, look at the horizontal line at the bottom. It's called the x-axis. This axis usually shows time intervals, like days, weeks, or months. It tells you how much price data changed over those periods. Now, look at the y-axis, the vertical line on the side of the chart. It displays the price levels of your asset. Now you know at a glance how much price rose or fell. Together with the x-axis, they give you a clear picture of both time and price movement. Notice the dot on the chart. This is called a data point. Use them to identify price at a specific point in time. Next, you connect the dots. Straight lines link each data point to the next, forming one smooth path across the chart. Watch the direction of that line. When it moves up, prices are rising. When it moves down, they're falling. That line is your roadmap for spotting trends and deciding when to trade. Knowledge check. Let's do a quick review of what we've learned about line charts. Match each chart element with what it means. You have 10 seconds to jot down your answers. Here are the correct matches. The data point, shown here in green, represents the price at a specific time. The y-axis, in blue, shows the price levels of the asset, and the x-axis, marked in red, represents time intervals like days or weeks. Excellent progress. Now that you can read line charts, you see why traders love them. They make it easy to spot trends and quickly identify price fluctuations. With this clear view, you now have the confidence it takes to analyze the market like a pro. Think fast. Let's analyze this chart. Notice how price has moved over the last several sessions. What's the overall trend? Is price moving down, sideways, upward, or showing no clear trend direction at all? Take a moment to lock in your answer. The correct answer is a sideways trend. See how price moved up and down within a range with no clear direction? There are no consistent higher highs or lower lows. The market is moving sideways. This movement is called consolidation. It indicates market indecision before a new trend begins. There are times when you may want to compare how two or more assets move over time. Line charts make it simpler. Use them to see if assets move in the same direction, convergence, or in opposite directions, divergence. Perhaps you discover two assets diverge. In that case, you can go long on one and short the other. This is how professional traders use correlation to double their profits and manage risk. Remember, in yesterday's lesson, you learned that market patterns often repeat themselves. Use line charts to backtest price movement and see how an asset reacted to real events. How did ABC respond when interest rates went up? What happened when tariffs were announced? Or when oil prices spiked? This is your mental edge. Use it to trade smarter. You now know how to read line charts and spot trends. But line charts are just one tool in your toolbox. There will be times when you need more detail, like how much price moved within minutes, hours, or a single day, or how much trading activity took place between 10 a.m. and 1 p.m. That's where bar charts come in handy. They bring every market move to life. Bar charts give you a closer look at price action within each time period. Every bar tells a complete story. It marks the open, the close, the high, and the low, OCHL. The open appears on the left side of the bar, the close on the right. The top shows the highest price reached, and the bottom marks the lowest price traded during that time frame. You just saw how each bar captures information within a single time period, a snapshot in time. But when we line up multiple bars together, we see the bigger picture, price patterns. Traders use those patterns to capitalize on market movement. Think fast. Let's examine the bar on the chart. Each bar tells a story, the OCHL. Now, which one identifies the correct OCHL? Is it A, B, C, or D? Take a minute to lock in your answer. The correct answer is A. The open was $40, the close was $80, the high was $120, and the low was $10. Congratulations if you got it right. Now you can read a bar chart. Great work, keep it up. Let's review. Bar charts give you a clear snapshot of market direction and how active or risky the price movement. In the next section, we'll explore a new chart type that shows this information even faster and more visually, candlestick charts. But before we do, we'll take a quick quiz to review what we've learned about line and bar charts.
Congratulations, another lesson complete. By now, your confidence should be solidified. You're on track to becoming a skilled, disciplined trader. Keep going, keep practicing, and we'll see you in the next lesson.
Congratulations, traders. We're proud of you for making it this far. If you're visiting our classroom today and ready to take the first step, Trading Made Simple is the foundation for everything we teach. If you're in the MMU family, take a moment to review Dow's key principles before tomorrow's quiz. At MMU, your success means everything to us. Keep learning, keep growing, and we'll see you in the next lesson.